There's less than 30 days left in 2025 and you keep watching all these rich flex their crypto profits all over social media. You still haven't bought the Lambo, retired your parents, or taken that expensive vacation to Dubai. There's more opportunity now than I've seen in all previous bull cycles combined. So what's really going on? Why aren't you seeing massive success in the cryptocurrency markets? It can be one of three things. A, you still don't believe in crypto. B, you're not putting your financial energy in the right coins. Or C, you just suck at trading. If you're either one of these or all three, we're going to solve for all these scenarios by giving you the best ways to make money in this crypto cycle. The biggest hype train this cycle is surrounding meme coins, and with good reason. Traders are cashing out by showing up in the trenches every day hoping to catch an early bid on a 100 million market cap runner. The odds of this happening are slim but possible. We've seen traders that have successfully flipped small accounts into massive P&Ls on social media. But how? First, you need bankroll to trade. You start with some SOL you can afford to lose and jump on a website like BullX. BullX is an all-in-one trading platform where you can scan coins launching with precision. With complete access to all the memes actively trading, you now have to source your information from places like X, TikTok, or private groups where others are also scanning the markets for potential bangers. As lucky as you think you are, identifying the best meme coins takes skill, so get in groups that can guide you on how to make good picks. In the description, you'll find access to our free Telegram group called the Wiseman, where we help traders like yourself find the best coins through our wallet tracking strategy. We focus on tracking highly profitable trading wallets to get notifications when they're getting in and out of the coins that we might be trading to. To make it to 1 million in trading wallet, you need to trade proper coins that have enough liquidity for you to exit your position. For more context, I interviewed Doc, the lead of Wiseman mentorship group, who gives us more information on meme coin trading. And so to avoid these obvious rug pulls and things like that, what do you think that people should be doing in order to invest in a solid project, something that's going to be here long term? Like, what are some key signs they can look out for?
I think the important part is to see crypto like stocks. Each of these cryptos that you get into, it's like its own little company, and you want to check out all the demographics. You want to check out what their Telegram looks like, what their Twitter looks like, what their community looks like. You're following them, different wallets that are in this coin. How long is the average hold time of this coin? So you really have to research how well this coin has performed. And sometimes you don't have that time to research.
Your level of due diligence really does define how successful you're going to be trading. Your ability to track wallets and looking into deployer addresses that have previously dropped really popular coins. Really becoming familiar with CT or crypto Twitter so you can learn what influencers are talking about and when these important key figures are dropping tweets that can potentially turn into meme coins. Do you think anybody starting crypto that has never done meme coins, they're completely novice? Do you think they should be even getting involved in meme coin trading right now? Is that something that you would recommend? Or
you need to understand when you're dealing with meme coins, you're dealing with something that's very volatile. A normal person cannot stomach being 90% down. Understanding what you're getting into is the most important thing when you're dealing with meme coins. And I came from a school of hard knocks. I took those 90% losses and then sold, and then the coin shot up 10, 20, 30x. I think the best thing for you to do is to understand the beast that you're trying to conquer. Be around people that dominate the markets. You want to learn how to win? Play with Michael Jordan. You want to learn how to win? Play with Kobe Bryant. You want to learn how to win? Play with Tiger Woods. And some people say, well, I don't want to invest any more money. I want to learn on my own. There's an expensive learning curve. And that expensive learning curve could be the same thing that gets you out of the bull run because you ran out of money.
Take my word that 2025 is going to be a massive year for meme coins. Coinbase and Binance are actively listing tickers, and it doesn't look like they're stopping anytime soon. Method number one is a solid way to make it as a crypto millionaire in 2025. OG Bitcoin investors can attest, holding your assets long-term works. The HODL method is probably the most famous crypto strategy. If it's the most effective, that depends on your bankroll and your patience level. One Bitcoin today, it's almost guaranteed that within the next 10 years, you're gonna make it to $1 million in your portfolio. As I'm literally recording this video, Bitcoin made history, crossing 100K for the first time. Back in 2019, Bitcoin hit a low of less than $4,000, and almost a decade later, had you held 10 Bitcoins, you'd be a millionaire as of December 4th, 2024. This method is pretty self-explanatory, but it's important that I highlight some pros and cons because in method number 3, it's really going to make sense why being more active with your investments matters. So let's get into it. Here are some of the pros of method number 2. In this method, there's really no need to time the market. It doesn't take much time to earn wages or profits when you're buying a coin that you really like, and you just invest every single week regardless of the price. If you know what your dollar cost averaging into has the potential to be valuable in the next decade, it's always going to be a good time to buy it. There's also some really cool tax benefits to method number 2. In some countries, if you hold for more than a year, you may qualify for long-term capital gains tax rates, which are lower than short-term rates. If the IRS wants a slice, you can just give them a piece and you don't have to give them the whole pie. I think most importantly though, you're going to get some peace of mind with method number 2, since you're not going to be obsessing over daily price action. Long-term holders can shrug off temporary dips because of their confidence in the investment. You know, just wake me up when Bitcoin hits 500K or when aliens arrive, whichever one happens first. The downside of method number 2 is that the roller coaster gets real. Prices can crash 90% before they moon 10, 20, 100x. HODLing through the dip can really test your nerves. Your portfolio will literally look like a heart rate monitor. Not to mention there's an opportunity cost with HODLing long term. Other investments or even different cryptos can potentially give you better price performance. You really could have bought that Nvidia stock, but instead you were married to Doge. And something that most people don't tend to have is the emotional intelligence required to hold long term. Watching your portfolio swing wildly like this can feel like you're in a bad relationship. You want to leave the relationship, but you really hope it's going to change, which with crypto, it inevitably does. That's method number 2. And remember, if it all goes to zero, at least you have those screenshots that you took when the prices were at highs that you can show your grandkids. Of the 3 methods I've showed you guys in this video, this is my personal favorite as it's the one that I implement with my clients when managing their portfolios, and I've personally implemented this strategy over the past 3 crypto cycles. When executed correctly, this method becomes the obvious winner for active investors as it's the best way to maximize your returns for a long period of time. This graph is called the Wall Street cheat sheet, and I learned about it really early on in my investment journey. Through the course of a market cycle, investors can experience a range of emotions as bullish and bearish price performance takes shape in the markets. On the bottom right of the chart, we see hope and disbelief, 2 emotions prominently felt when the market starts to recover after a very bearish time period in the market. When crypto breaks all-time highs and gets into a period of price discovery, the market eventually reaches a peak euphoric state. At this point, we've seen prices we've never seen before, and just as quickly as price swung up, the market aggressively corrects as early investors start to exit the market. When novice investors least expect it, the market starts forming lower lows and correcting. For people who don't know what's going on, this moment can cause a lot of anxiety, denial, and panic as it just drops lower and lower. This could go on for about a year after the bullish push, and the next 2 to 3 years are just a very slow bleed as people continue to exit, now in a loss or break even if they didn't exit at the top. A lot of people get angry at the market and can get depressed because they think that the market can never go back up again, when in reality, their timing was off and they were doing the wrong thing at the wrong time. The key to mastering the market cycle is timing when your buys and sells are going to be and having 2 solid strategies. The first is your buy strategy, which we will primarily implement during years 2 to 4 of the cycle. These are the years where the market is reversing after a really big year in crypto, and for about 2 years you have a chance to buy the blood from everyone that's selling at a loss from buying that top during the euphoric period. You really need to trust your strategy here. It's difficult to perfectly time the floor, so the safest bet is accumulating your favorite projects while others have lost all hope in them. Take advantage of bearish news, global political turmoil, as prices tend to fall to their lowest points during these times. After the market starts to shift, you then begin to implement your selling strategy, selling off your positions in clips as the market makes higher highs. Once you get really good, you can more or less guesstimate the highest points of the market and start selling the majority of your positions there using Bitcoin's price chart as your North Star for when the market as a whole could start to reverse. The goal here is to be as liquid as possible to buy back all of the initial units you had in the previous cycle, while still having cash left over which you can use to invest back in and buy more coins or use it for other investment strategies. If you're new to crypto and you need help building a strong portfolio, reach out at cfacryptopro.com/crypto. I'm personally assisting investors in scaling your crypto portfolio utilizing the market cycle Wiseman method. I currently help manage millions of dollars in investments alongside my clients using non-custodial solutions, meaning you keep full possession of your funds at all times. That's a wrap for this video. If you gained some knowledge, help out the channel by giving this video a thumbs up and commenting something nice below. If you want to keep learning more, make sure you subscribe so you don't miss our next video. Thanks for watching.